Hello everyone, it's Elizabeth Rose here. Today I want to talk to you about inflation. You may be asking, what does inflation have to do with mortgages? What does it have to do with mortgage rates? Well, it has quite a bit. You may be surprised. As you may have heard, for a while now the Fed has been talking about there are no hints of inflation, or inflation is a moderate risk, and they're just going on down the road, kicking the can a little bit further down with this monetary policy that they've had in place for a while now. But we have seen some evidence of inflation. So now, as we see inflation ticking up just a little bit, what does that have to do with mortgage rates? It has quite a bit, and let's break that down. As a bond investor, you're coming into the market, you're purchasing bonds, and you're getting a fixed rate of return. That may sound really great to many of you. However, let's think about that fixed rate of return. Let's say you invest $100,000, and let's say the rate is 4.5%. So you're getting $4,500 a month for your investment. Everything's good. Everybody's happy. Well, inflation starts picking up, and you're still getting $4,500. That $4,500 isn't going quite as far as it was last month or last, 6 months ago. So, what do you as a bondholder do? Well, you're going to demand more. You want a higher interest rate for your money. And if you don't get it, you're going to go away. Either way, the market loses. So, if you're demanding more, the market has to raise prices, which means raise interest rates, so you, the bondholder, are happy. And if they don't do that, you, the bondholder, are going to leave. You're going to go to the stock market. You're going to put your money in a little bit riskier asset to get a better return on your money. So that's why inflation is very important to the bond market. It is the arch enemy of bonds. You may have heard that before, and if you have, it's certainly not going to be the last time you hear it. Inflation is the arch enemy of bonds. Once that is out of the bottle, it's kind of like a genie. It goes up into the air and it just goes crazy, crazy, crazy. And it gets out of control. Once it gets out, it's hard to get it back in that bottle and get it under control and get it under the thumb of the Fed. So it's very important for the Fed to be watching this, and it's very important to you for your home loan rates, for you to be aware that inflation does matter. And as we see inflation come back in, and it will, what goes down must come up. It will come back out, and as it does, expect mortgage rates to move higher. So that's your tip for today on inflation and mortgages.